Exercise 4-23, we're going to journalize closing entries from T accounts. So selected accounts for Kebi Photography at the end of December are as follows. So here's our data table. Notice we've got our information in T accounts. Requirement 1, journalize their closing entries and then determine their ending capital balance, which is a step that you always do in the closing process. So I'm going to move everything up. All right, so the first step in the closing process is to close revenues to income summary. So here's our data. We need to find our revenues. I see service revenue, only one revenue. Most companies have more than one revenue, like another common revenue would be interest revenue. So here's our service revenue account. How do we close this account? Well, we need to debit it. How much are we going to debit it by? 33,000 plus 4,500. So what's that? 37,500. So I'm going to debit 37,500. Put the comma in there so it looks pretty. I'm going to debit service revenue. So where do revenues get closed to? They get closed to the temporary holding tank called income summary, because it's going to hold revenues minus expenses, which is also known as net income. That's why they call it income summary. So I'm going to copy and paste this to close revenues. Now, to do this problem, it's a lot easier if you have a piece of scratch paper and you do a T account for income summary, and in this problem we do have to keep track of capital. So notice over here I have credited income summary, and this 37,500 represents service revenue. So I'm going to, because income summary is credited, I'm going to credit income summary in my T account, 37,500. All right. So now we can check our answer. Fantastic. Fantastico. Next, we're going to close our expenses for the period. Let me move this up. Move this down. All right. So our expenses. So I'm going to just start here, work my way down, find the first expense. So my first expense is salaries expense. So how am I going to close this account? I'm going to add up this plus this, and that gives us 33,200. So to close this expense account, I need to put it on the other side. So 33,200. 33, comma, 200. Again, I got that 33,200 by adding 31,800 and 1,400. All right. So this is salaries expense being closed. Now, why did I skip the first line? Because this is a credit, and debits have to be listed first. So I will do the debit later. So let's work our way down. After salaries expense, we've got another expense, depreciation expense. So, and that's building. Make sure you grab the right one. So how do I close this? I'm going to put 7,000 on the opposite side. So I would close it by putting on the credit side. So I'm going to credit it. And then let's go back up here, see what our next expense is. And here's our next expense, supplies expense. So I'm going to credit that. How do I close it? I'm going to put 2,700 on the right side. So that's why I'm putting it on the right side up here. And then finally we got depreciation expense on the furniture. And we're closing it by putting 1,500 on the right side. Now notice our debits don't equal our credits, so we're going to add up 33,200, basically add up all your credits, and when you do, you get 44,000, 400. So what account do we close our expenses to? Income summary, because income summary contains net income or net loss. So since I'm here, I guess I need a explanation to close expenses. So while I'm here, I need to go down here to my scratch paper, And notice I have debited income summary. So on my T account for income summary, I need to put 44,400 on the left side. Now notice revenues are on the right, and expenses, which I just got from here, are on the left. So does this company have a net income or a net loss? Let's figure out what the balance is. Obviously the balance is going to be on this side. So to calculate the balance, you're going to take 44,400 minus 37,500 gives us a balance on the left side. So because revenues are smaller than expenses, this is a net loss. Oh no, our company has a loss. Not good. All right. So let me go back to my accounting lab. Let me check my answer. Nice work. Next, close income summary. So we need our scratch paper. So notice the balance is always on the bigger side. The bigger side is the left side, and this is a net loss. So how do I close an account that has a balance on the left side? I'm going to put it on the right side. I'm going to credit income summary. So I'm going to skip the first line because that has to be a debit account. And what was the amount? I'm going to credit it 6,900. 6,900, which means I have to debit an account for the same amount. All right. So what account does the income summary get closed to? It gets closed to capital. Now most companies, not all, but most companies make a net income, a profit. So usually when you're closing this, it's going to be containing a net income that you're closing to capital. However, this $6,900 is a loss. So now I need to post this to the capital account. So notice capital is being debited. So over here, I'm going to put 6,900 as a debit. And eventually at the end of the problem, we need to calculate the capital, because remember up here in requirement 2 it says calculate the capital amount. So we might as well fill in our T account now. So we need to fill out or find the balance from our data table. So let me open up the data table. Here's a capital account, 49,000. So this 49,000 was before the closing process. And this label is actually wrong. I use this scratch paper, this Excel from the previous problem. All right, so I'm going to plug this 49,000 over here on the right side, because that was our beginning balance, or I should say the balance at the beginning of the closing process. Okay, so now we're done with this step, except I need a label to close income summary. Check our answer, and the last step, the fourth step in the closing process, is to close withdrawals. So let me find our withdrawal account. Here's our withdrawal account. Notice it has a balance on the left side. So to close that, I need to put it on the right side. So I'm going to credit the withdrawal account. And what account do draws get closed to? In other words, what account does draws affect? They lower the capital account. So that's why I'm going to be debiting the capital account for this same amount, 14,000. So I need to finish my T account. So notice over here, capital is being debited, so I need to debit capital for my T account. And then let's see if our new balance is correct. So the new balance, to get this new balance, you take, I'll show you how I do an Excel Excel formula. You say equals this minus the net loss minus the draw. You hit enter, and there we go. We have a $28,100 credit balance in capital. So, but first, before we answer that question, I need to go back to my accounting lab, enter the explanation, check the answer. Fantastic. And then finally it says determine Kebby Photography's ending capital balance. So the beginning balance was 49,000, and we got that from the data table, which, just to remind you where we got that from, we got it from here. And then we have a net loss, which we got from right here. And then we closed draws to capital, which is right here, 14,000. So our ending balance is 49,000 minus the net loss minus the draws gives us $28,100 balance in capital. So what's happened is the company's capital amount, which is basically the equity or the portion of the company that the owner owns, has fallen dramatically because they've had a loss and they drew out a lot compared to the loss. So this company cannot keep doing this at this rate. They need to either draw less, and they need to draw less and they need to start making a profit. But that's it for this problem.